Very, very warm welcome to you as join us on today's episode of Tax Matters. My name is Olumoyiwa Matuloko. How's your week been? And how is business going? Last episode, if you recall very well, we had two gentlemen in the house to discuss full implementation of self-assessment. And they are Mr. Kingsley Okengwu, the tax controller of the FIRS LTO Tax Office, Non-Oil Lagos. He was joined by Prince Gbolahan Oyegoke, a tax practitioner. The two gentlemen are still here with us today. We are still talking self-assessment, and we'll be looking at instrumental payment. We'll be looking at withholding tax credit notes, or let's say withholding tax and the result, which is the credit note. The program once again is Tax Matters, and I'm Olumoyiwa Matuloko. Gentlemen, you're welcome to Tax Matters.
Thank you.
Mr. Okengwu, how does the FIRS or how do tax authorities in general view business owners who don't have accountants, who don't have lawyers, who just come and want to file self-assessment? How do you react to them?
When I speak for FIRS.
Okay.
Now, when you come to FIRS is doing everything possible to let the taxpayer know quite well that what FIRS is out for is to make sure that the right person and the right amount of income is taxed. Now, FIRS has come to the realization of the fact that there are different classes of taxpayers. And now we have come to the realization that some of the companies that are limited by name, some of them cannot actually prepare a financial statement the way it's supposed to be prepared and to satisfy the provisions of the law. Now, because of this, right now, for the past years now, we have gone into segmentation of operations. And what do I mean by this? We try to categorize the large taxpayers. And these are companies that their turnover is 1 billion naira and above. And now, after that, we have what you call the medium taxpayers. And now we got the third class, small and micro taxpayers. Why do we do this classification? This classification is done with the realization of the fact that these are different classes of taxpayers. The operations are different. Everything, their parameters of tax are completely different. The type of people they operate with or employ are completely different. Their volume of trade are completely different. So because of this, you cannot judge a small and micro taxpayer with a large taxpayer. You cannot put them in the same platform. Neither can you put them in the same platform with a medium taxpayer. And so this is the essence of the segmentation. So once we have gone to that, we look for the strategy, the appropriate strategy for the large taxpayer, the appropriate strategy for the medium tax, and the appropriate strategy for the micro and small taxpayers. And now, even when we come to the micro and small taxpayers, we break them down further. That's our drive now. We try to break them down and to know deeper about that micro taxpayer. So FIRS is thinking of what do we do to the micro taxpayers that are not able, that in essence and in fact, that are just by name, but they are not really operating as a limited liability company.
Just limited liability by name.
Just limited liability. But by operation and by volume, you cannot do. And some of these people, and most of them probably may not be able to hire the services of some of these professionals as the last taxpayers will be able to hire. So it is a problem which FIRS is thinking about, and this is why now we have segmented that, and the FIRS is driving it and to know exactly the appropriate strategies to come.
Are you saying that you will not mind if you ask a small and micro business owner, bring this, bring that, and he doesn't have them? I mean, the kind of documents you ask for from a large taxpayer, you won't mind if the small business owner does not have them?
No, not that we won't mind. Because by law, the law says a limited liability company should file so thing.
Okay.
Now, FIRS cannot go back and say you should not obey the law.
Oh, you have to
but we know their limitations. Mm-hmm. For example, if you go to some other jurisdiction, now, presumptive tax is applicable to even limited liability companies. They say, okay, we have satisfied this class of people. Yes, they are limited. But because of certain parameters which I've identified, let us bring them into this closet. And if you bring them into this closet and be able to take as much as you can, and they will pay it happily, you see that your tax will go. You see, the level of collection we have made recently is essentially as a result of full implementation of self-assessment in line with this segmentation.
Talking about keeping to the law, we're talking about due date for filing, which you have explained, and then due date for payment. I know why I'm talking about this, because as the discussion progresses, we'll be talking about making sure that every kobo that is due is paid by that due date for filing. What is the due date for payment under self-assessment?
Now, under the self-assessment program, you'll find out there's a, the due date of assessment and the due date of filing coincides. That's yes. Now, you are supposed to file. Your counting date is 31st December each year, and your due date of filing is 30th of June
of the following year. 6 months
of the following year.
Good.
Do you understand?
Yes.
And that your due date of filing, do you understand, becomes automatically your due date of payment. And failure to pay on that your due date of filing, there will be penalty and interest. But when we were not fully, you see, before 1998, companies were asked, so it was optional, that you can file self-assessment. Even at that time, 1% bonus was given for companies that file self-assessment. And by that time, we were having government assessment. Although we still have administrative assessment now, but we were having government assessment. And when those assessments are raised, you served it. Now, the date of service of the notice is important, it's recorded. And now the date of service of the notice and the date of, filing, the date of filing of that returns now is different, and the date of service of that notice, because if the taxpayer doesn't get that notice, he's not going to pay you. So because of that, we say that, okay, your due date of filing is 6 months from the
end of your accounting year.
But their due date of a payment is a day after the due date of filing previously. But right now, the due date of filing and due date of payment under full self-assessment has coincided.
Okay. But there's this issue of instrumental payment.
Yeah.
So, if my due date of filing is June 30, and you say due date for payment is also June 30th, how does instrumental payment plan play out under the new regulations?
Yeah, under the new, if you go to Regulation 18, under Regulation 18, subsection 2 of it, now what that regulation is saying, it said that the taxpayer is to render its return and now ensure that it pays its tax to the manner that the last payment will be on the due date of payment. But however, that the taxpayer, the second, however, the taxpayer can apply for instrumental payment, and that instrumental payment should be paid not later than 2 months after the due date of payment.
Okay.
Then, finally, under paragraph 3 of that section 18, it said that not minding the two above, that FRS or the tax authority, relevant tax authority, should not give any instrumental payment more than 3 months after the due date of payment. So what is the bar? The bar is that the relevant tax authority will not give you any instrumental payment after 3 months from the due date of payment.
Okay.
But the problem there that the implementation is having now with the tax authority, with the tax practitioners are trying to come up with, is when they make reference to section 77 of Companies Income Tax Act, which is the former 59 of the former code in 1990 Act. Now, you see what that section is saying. It said that self-assessment filers are to pay their tax within 90 days from the due date of payment in one lump sum or on instrumental payments, not more than 6 months, based on approval by FRS. What does it imply? It implies that in that act, that FRS has the right to give instrumental approval, but not more than 6. But now FRS said, this is my discretion. And now, because we want our taxpayer to start even in January, which they are not used to, start even in January to start breaking their payment gradually. By the time they get to June, you find out that they have paid their tax. And now, in exercise of this, FRS said that in that regulation, that the limit is 3 months.
After due date.
After due date.
Okay.
It's 3 months.
It's still there.
It's still there.
Okay.
It's 3 months after due date.
Okay.
But however, in the practice of this, because the regulation came out in 2011, and now the sensitization were made, some of the taxpayers said, look, we have drawn a cash flow. And because we have drawn a cash flow, it will be difficult for us to go to the board to represent this, to make it possible for us to conform to these 3 months, because most of them were used to the 6 months before. So FRS tried to soften.
Okay.
Now, in order to show that we have our taxpayers, our customers at heart, let us give them another 1 year.
Okay.
By January 1st, 2013, full implementation of provision of Regulation 18 must be applied.
Okay.
That's what that's the position right now.
So there's a moratorium, a delay, so to say, in full implementation of those sections, just to make sure that it is comfortable for taxpayers.
Yeah, just to make sure that it's comfortable.
Okay.
But FRS is still playing within the rule of the law, within the limits of the law. So, but asking them, okay, since you said that your cash flow will be affected and there'll be a problem to go back to the board and get this payment, fine, no problem. We'll give you throughout this year. By January, make sure that you get this right, and outside that, you'll be penalized.
You said earlier on that if my accounting year is January to December, that my due date for filing and due date for payment is 6 months after the accounting year end, in which case June 30. And you are now saying that I can start paying from January in installments, so that by that due date, I will have finished paying. How does a company owner know what his tax liabilities will be when at the end of December, by the time we resume in January, I will just hand over my books to my auditors, and then because you know that it takes time, that's why you have 6 months, right?
Yeah.
How do I know that by June, or by the time my auditors finish looking at my books, that my tax will be 1 million naira? How do I know that I now begin to pay you in January, in February, in March? Why are you expecting that?
Yeah, that's very interesting. You see, if you listen to Oyegoke, if the viewers listen to it, what the external auditor does is not to write the books of the company.
No.
The books have been prepared and now handed over to the external auditors to vet and confirm what is there to the board. So, right on the 30th of December, as you read, now the management account, the account of the company, is already in their hands.
Okay.
So internally, and what they are submitting, what they are paying is based on estimate, not the actual. Now, they might estimate that, okay, this year, from what you have seen from our books and operations, that we are going to pay 10 million. Now, by the time the auditors finish and the consultant comes in, they discover that it's 9 million. Now, they are paid, probably at that point in time, they are paid an excess of 1 million. It will be in their credit. Or it's discovered that at the time the final accounts is prepared and computation made, now their tax is 11 million. Now they only have 1 million now to settle.
Okay.
So that's the issue.
Okay. So, Mr. Oyegoke, do you have any problem with this instrumental payment? Do you agree with him that I should have known whether we have made profit or loss?
I agree with him, and you discover that is most applicable to organized sectors. If we are looking at the small and the micro, they might not be in position to do that. But then, everybody knows that tax is compulsory. You have in your mind what your profit is, I mean, if I'm buying now, I won't sell at the price I bought. So if I've added 30 naira to it, or 30%, I may be looking at what is 30% of that set aside to meet up with my tax obligation in the future. And I tell you, many a times they have even been paying ahead. The only thing is that some of them fail to pursue that angle, and that angle is withholding taxes that have been deducted from their payment here and there. Some of them, once they have been paid, they ignore that tax credit. They don't pursue it, and that is part of taxes they have been paying in advance. If you don't have it, nobody will recognize it.
I was coming to that. I was going to ask about the place of withholding tax, deducted tax source from payments due to the company owner, the business owner, for which credit has not been given in the form of credit note. The way it works is, for the benefit of our viewers, a big organization for which I performed a service or sold goods will deduct withholding tax at source. Now, you people have also called that, you have always called it an advance payment of tax. So, what is the place of withholding tax in this instrumental payment? You have just explained it, that in actual fact we have been paying. But you see, a lot of people don't even know that it is advance payment of tax and that it can be used to offset their tax liabilities. So, how are you making it easier for those who have suffered withholding tax deductions at source? How are you making it easier for them to get credit for it and use it to offset their tax liabilities? Mr. Okengwu.
Yeah, I'll add to that question. But first of all, how are we making it easier? Now, the way we are making it easier is through a process. You see that before everything was manually done. But with the introduction of the Project Facts, which of course FIRS has a special web portal that people pay in. Once a company has its team and now has a relationship with another company in matter of transaction, and the tax is deducted from his income, now a payment is made to us through the agent, and now the agent will send to us online. It will send to online, and as they pay, at the point they are paying in the bank, they will get what they call the e-ticket, electronic ticket.
Okay.
And now with that electronic ticket, they will come back to our office later on, because it's a bulk payment. They'll come back to our office for their credit notes. Now, the web portal will generate both the bulk payment and the credit note for the agent. And now the agent is expected to distribute this credit note to all the beneficiaries.
Okay.
As per the schedule, electronic schedule that has been submitted.
Okay.
So again, is that FIRS has gone further, because before, when we get this, we begin to wait for confirmation. Maybe the agent is in Sokoto, and now we write Sokoto for that confirmation and the rest of them before one office will give credit to the other. But right now, we can do a confirmation online. Any payment that is made in Sokoto and is related to your office, you can view it online and do that confirmation online.
Would you give me credit?
And now, yes, you have come, you asked a question that how come that there is an instrumental payment, taxpayer, how does he, benefit from this credit note? Now, you should understand quite well that now the tax is paid on preceding year basis.
Yes.
Now, the operation you did in 2012 is what you are paying the tax in 2013.
Okay, that's true.
So that by the end of 2012, every payment that has been deducted, every credit that is yours, must have been in the FIRS system.
Good.
If the agent remits immediately,
Good.
must be in the FIRS system.
Good.
Now, what happened is that it is possible that by the time you are sending returns, you've not gotten your credit notes, which will help you offset, because as you say, it's an advance tax, which will help you to offset the current tax. And again, is that irrespective of the period, you can carry forward and backward, from 2007. So we'll give you the credit. So what if the credit note has not been obtained? It will be difficult to give credit to the taxpayer if the credit note yet is not on ground. But if we have if the taxpayer just come with electronic receipts, now that electronic receipt, we can use it and enter into our system and know whether this payment was actually made, and now be able to load down and know whether the credit is supposed to be given to that particular taxpayer or not. But we are looking forward, because we are looking for a more robust system now in the area of ITax. Now, right now, what ITax we are looking after that ITax will do is going to be a complete, a collection automation system. Now, by this, if you, Mr. Muyiwa Limited, you have a tax of 10 million to pay, the system, as soon as your consultants has prepared your listing and send in your returns, 10 million will debit to your account immediately. Now, you, Muyiwa Limited, you have done a business in Kaduna, and they deducted withholding tax of 1 million from your income. Now, automatically, that system will credit you with 1 million. Okay. One of the major problems that we have is this agent. Sometimes the agents fail to come for the credit notes of the taxpayers. They fail to come. And now the taxpayers are suffering. And this is why we are looking for the ITax to come as quickly as possible. We are not happy that a credit note is there and the taxpayer is not taking advantage of it. Now, let me tell you the problem that FIRS have in this area. Now, an agent, Oyegoke could be an agent. Now, he has in his schedule over 1 million taxpayers. It's something that we have with the registrars. In the register of companies, you have a lot of them. Now, you have about 1 million taxpayers that money has been deducted from. The easiest way to reach the taxpayers, that 1 million people, is not to reach them individually. Is to gather all these things, give to the agent, and now the agent will distribute them. Okay.
Yeah, okay. Yeah, waiting be this.
The deduction now for withholding tax.
Withholding guinea. Look, if you not pay me my correct money today, hey, Munu get made you half for.
But madam, should be your company paying income tax.
Yes, that one I enough load for me to carry. Why you not want come add join them again?
You see, withholding tax now advance payment for income tax. So when you do some kind job like contract, we go remove small from them when we won't pay you.
I don't go contract am up. No. I beg tell me another.
No. We must pay the money to FIRS within 30 days, and they go give us withholding tax credit note to take show say you don't pay part of your income tax in advance.
So
now to help make the money where you go pay at the end of the year small.
So this withholding tax something, it be like part payment of no.
Exactly, madam.
I beg you. Give me my check.
Remember, come collect your credit note.
Withholding tax, now for we own good. FIRS, it pays to pay your tax.
I want to ask you, when it is not a session like you painted, where like registrar, when you have company registrars dealing with millions of people, when it is for a more manageable group,
company,
in a more manageable setting, can a taxpayer who has suffered that deduction by another company, can it go straight to the FIRS office involved and collect that credit note?
Yeah, like in my office, we do a documentation. Because you must do a very good documentation, otherwise the taxpayer or the agent will come and disturb you that, look, they've not gotten this thing.
Okay.
See, the procedure is that by the time you make payments, all right, now the first thing, you have the bulk receipt. And with that bulk receipt and the electronic, credit, electronic ticket that you have, it's an evidence that you are the agent.
Okay.
Then you come and we pack everything and give you.
But
But if in a small setting that you said, which can be managed, now we do a documentation.
The beneficiary.
Where we know quite well that this agent has not been coming, and we try as much as possible to read them. And the beneficiary comes, and we confirm that, and he has a note. Sometimes we ask them, go and get a note from the agent. And the agent might give a note. And with that, we do a documentation, and we can release such a credit note.
Okay.
And we can confirm, of course, that credit note online as at now, and not be able to relate the pains of it.
there's that car advert. End of discussion. There's nothing more to add except to thank you for being such good viewers. We want you to join us next week on this same session, same day of the week, for a fresh episode of Tax Matters. We'll be looking at another topic. Thank you very much.